All right, traders, we've just had one of the big events of the week that we've been waiting for. It was, of course, US CPI that was released earlier. That's inflation data for the US. And this is obviously important for US markets. And we can see on screen here, this is the Dow US stocks. We can see there's been a fair bit of movement since the release, but the price is pretty much exactly where it was before the release came out. Now, previous inflation data for both CPI and PCE have seen a rapid rise over the past several months to the highest levels of growth since the 2008 financial crisis. Previous readings showed CPI hit 5% and PCE was up almost 4%, and the latest CPI reading that was out today once again accelerated to a massive 5.4%. Now, keep in mind the Fed is trying to average 2%. Now, so far, the markets have been able to shrug off inflation concerns as the Fed chair, Jerome Powell, is adamant that inflation is expected and will only be transitory following the pandemic. It also helps that the Fed is targeting average inflation, which means it can overrun 2% for a while before any action will need to be taken. Since unemployment also is relatively high compared to pre-pandemic levels like we were talking about last week, it doesn't seem that the Fed have to be in a rush to tighten monetary policy just yet. However, policy tightening is coming whether we or the markets like it or not. The question is when it's going to come. Recently, the Fed's dot plot showed that they'd taken a hawkish pivot as 2 rate hikes were now forecasted in 2023. And so today's inflation reading gives us a bit of a hint that inflation could be becoming a little bit more of a concern than maybe some people think, although there are debates about whether the reading is any that is accurate at all or not. But if inflation does continue to rapidly escalate, we could end up seeing the Fed being forced into tightening monetary policy earlier than currently expected in order to maintain price stability. Now, the main thing is, of course, the timeline of tapering and interest rate hikes. Higher inflation could obviously see that timeline moving closer, being shorter. So this should be a bullish event for the US dollar and bearish for US equities, which have been continuing to push up to those all-time highs off the back of quantitative easing, amongst other things. So you can see the initial reaction here was bearish, but it's pretty much retraced that and returned to where it was, this sort of swing low from throughout the day. Now, what I've been looking at is a combination of the daily, the 4 hour and the 1 hour. So let's look on the 4 hour. The reason I've been looking at this is that there are 2 key levels here. Obviously, the swing high up here, that if we broke through that, it would be continuing this bullish structure that we've been having and breaking to all-time highs. But that retracement that we had, especially after the CPI release, that surge of momentum to the downside, it only went as far as to the previous high from this bullish structure. Now, you can see if we switch to the hourly chart, I wanted to point out some levels here that I'm keeping an eye on. So in terms of these trend lines that we've got here, I'm pointing out the short-term structure and the longer-term structure. So this is the high that we just saw on that 4 hour chart there, and you can see that it struggled at that level. It broke through the high over the short-term structure, and actually this short-term higher highs, higher lows, the short-term bullish structure has confirmed this Fibonacci range according to how we trade using the Fibonacci retracement extensions with the Duomo method, which puts this 127.2 in play and the 161.8 that's a bit further up. So of course, if price is going to continue to the upside, we have potential double confirmation over here with this trend line for the short term. This trend line is not one that I'm particularly super confident in. It's not the strongest, but it does map the previous 2 highs for the short-term structure, and beyond that we'd be looking at this longer-term trend with the 161.8. Of course, though, it was meant to be a bearish event for US stocks, the fact that inflation's rising. So if price continues to the downside, we'd be looking to try and trade the possible break of this structure. I think that the earliest sign that we could see that is closing below this swing high-low and testing from the other side. That could see us creating a lower high and returning to bearish structure. So there's a few outcomes that are tradable here. Keep in mind that we've got earnings coming out at the moment for US stocks, so things could change rapidly. And of course, when it comes to inflation, there is the debate about whether the CPI is an accurate reading right now, whether it's a correct reading, and whether inflation is rising or not, whether it is a problem or not. So we have to wait and see what the Fed says about all of it. But anyway, that's all for now. So please do leave your thoughts in the comment section down below. Let me know which markets you're following. I think earlier a lot of us were looking at US dollar yen, and obviously with this being a US dollar moving events, then all of the major pairs have been disrupted. So let me know which markets you're following. Hit the like button to support the channel. Don't forget to subscribe so you don't miss any of these videos. And if you want free training about how I trade, check out the link in the description box and you'll find our 5-part series there. Thanks for watching. Take care. I'll see you in the next one.